The longest economic expansion in American history is officially over. We've been in recession since February, apparently. The economy collapsed so rapidly that the National Bureau of Economic Research wasted no time in announcing a recession, a stark contrast to previous downturns when the body took upwards of a year to declare what most people already knew. Safer at home orders and social distancing meant to fight the pandemic have crushed broad swaths of the U.S. economy, from airlines and retail to restaurants and movie theaters. More than 42 million Americans have filed for unemployment benefits. Major companies including JCPenney, J.Crew and Hertz have filed for bankruptcy. And economists are predicting the GDP imploded at an annualized rate of 40% during the second quarter. So what does that mean to you as an investor? You need to take cover. You need to re-examine your finances and prepare for the worst. Here's the first thing you can do. Re-examine your financial fortitude. How much do you really need to sustain your needs for an extended recession? There is hope that this recession could be relatively brief. Economists are predicting GDP will turn sharply positive in the third quarter as businesses continue to reopen and Americans begin to travel again. But preparing for the best is never really the right financial strategy. You have to hope for the best, but be prepared for the worst. Go back to your books and determine how much you really need to sustain you and everyone depending on you. Whatever excess you have is your risk tolerance. That's what is safe for you to invest during the recession, because there's opportunities out there in the market. There's new business ventures and there's other investments. Some opportunities may actually have astronomical returns, but like any investment, there's always a risk. Don't risk what you can't afford to lose. Number 2, secure not just your sustenance, but your future using metals. Gold is predicted to hike to $3,000 in a little over a year and $5,000 in a decade. It's currently hovering around $2,000. If gold dashes towards $5,000, that's more than 100% gains. And if you want to be conservative and let's just assume 3,000 ounce, that's almost a 33% gain from where it is today. Don't feel helpless. The government is doing everything it can to help the economy recover. The Federal Reserve slashed interest rates to zero, promised to buy an unlimited amount of bonds, and rolled out a series of emergency lending programs. The U.S. Central Bank is even, for the first time, directing the purchase of corporate bonds, including junk bonds. But until the economy is actually recovered, you have to protect your investment. Are you just getting into metals and you want to learn more? Check out our gold and silver investment guide. It has all the information you need, all the questions answered, and a really good read for someone just starting out. If you want to learn about investing in gold and silver, click the link below.